John Herman from Australia. And John is going to give us a picture of monetary reform in Australia. And he has been involved in this his whole career. John, I'd like to ask you to give yourself a brief introduction when you're up here, because, you know, tell us what you think is important about you that we should know. And so let's welcome Mr. John Herman.
Well, I wanted to thank Stephen for inviting me to give this short presentation today. I'm John Herman. I'm heavily associated with Economic Reform Australia, which is a reform organisation which has monetary reform as probably its major plank. And we're a non-party organisation. We organise meetings around Australia. I'm actually a mathematician by training, an applied mathematician. I've been involved in doing debt modelling for a number of years. And so I've been interested in a number of issues which have arisen in the process of that. One of them that I quickly discovered in my modelling activity was the issue of why does money grow faster than the real economy? I've been pursuing that issue and trying to get my head around that one. Also, what is necessary for a sustainable economy? What are the links, necessary links between financial sustainability and ecological sustainability? That's an issue, I believe, which is of increasing interest to the Greens and other conservation groups. So we have a lot of contact with a lot of these organisations in Australia. There aren't any mainstream parties in Australia with an interest in monetary reform. That's not too surprising, I guess. The Greens have an increasing interest in it, and they have representation in the upper houses of all the state and federal parliaments. We have an ongoing discussion with the Greens. It's not a main plank in their policy platforms at the moment, but there is an increasing interest in it. A lot of them come to our meetings. There's also the other groups are the far right, who've always had an interest in monetary reform. We don't have anything to do with them, but they're always there in the background. And there are a number of other groups apart from ERA. There are other groups like the social credit people in Queensland. They have a school of studies, and they're particularly interested in monetary reform. We also have links with the New Zealand monetary reformers, especially the New Zealand Democrats, who are now called the Democrats for Social Credit. They used to be the Social Credit Party, and they reverted to using the title Social Credit. But I think they have a primary interest in monetary reform across the board. So we interact with them as well. ERA has a number of patrons, and we're very fortunate in that we have a number of heterodox economists who give us support. And we have several heterodox economists who are patrons of ERA. I think it's very important to have contact with and to have support from professionals for all sorts of reasons. I'll just mention a few of our patrons. Professor Frank Stillwell, who is at Sydney University, Associate Professor Reverend Jones, also at Sydney, Dr. Shan Turnbull, also associated with Sydney University, and also Associate Professor Steve Keen. I don't know if you've heard of Steve Keen. He wrote a book called Debunking Economics a few years ago, and I would recommend this book to anybody who's interested in pursuing the issue of the myths that surround orthodox economics, because he's gone to town on this one in a big way. All of these people are basically what I would call post-Keynesian economists. We also have links with the Georgists. We have a couple of Georgists in ERA, and also some links with the social creditors, and as I mentioned earlier, the New Zealand Democrats as well. So we like to work in liaison with and in cooperation with other like-minded organisations, both in Australia and other countries. Particularly, I wanted to mention CUMA, right from the beginning of ERA in 1993, I was one of the co-founders of ERA. We always took our lead from and advice and guidance from Cummer and the Cummer economists, many of whom have since demised, unfortunately, but there's still an active group of people, of economists who work for Cummer. The one I wanted to mention in particular was Professor John Hotson, late Professor John Hotson, whom we invited to Australia in 1993. He gave a talk in most of the big cities in Australia at that time, and had media interviews. And I believe he did a tour of New Zealand. I think there was a mention made of that earlier with Bob Blaine in about 2 years prior to that. I think John's loss was a great loss to the monetary reform movement because he had so much to contribute at a technical level. So that was a great loss. We've also brought to Australia many other foreign speakers for travel and for tours around Australia, speaking tours around Australia, including Professor Bob Blaine, Ken Bonsack, and also Paul Hallyer, the Honourable Paul Hallyer, and many others from other countries as well as North America. My position is rather complicated. I'm rather attracted to some of the Gazelist ideas, but I'm also very strong on 100% reserve financial system, personally. I used to be a 50% reserve person. I'm now converted to a 100% system. I think that is workable. I wasn't so sure about it in the past, but I am now. So that's sort of a basic description of where we're coming from and what we are. I wanted to say, I don't have a lot of time here, I wanted to say something about the Australian monetary system because it is significantly different from the American system. I think it might be interesting to know how other systems work. In a sense, the American system is rather unique for all sorts of reasons. The two big differences between the Australian system and the American system is that the central bank is public. That's the first difference. It's not a private institution. It is a public institution. It is semi-autonomous, which means that it makes independent decisions on interest rates, but it takes guidance from the government on the inflation target, usually in the region of 2 to 3% per year. It takes guidance from the government on that, and there's usually a consultation every year on what the inflation target will be for the year. That's a political decision. All the other decisions are independent, taken independently by the Reserve Bank. So it is effectively independent of government. There are similar systems to this in other countries, especially Canada, New Zealand and Britain, where there are no minimum reserves required. That's the other main difference between the American system and this one. I think there's a requirement of, 10% reserve requirement in the United States, something like that. In these other countries, and in Australia in particular, there is no reserve requirement whatsoever. However, and in fact, if you look at the website of the Reserve Bank of Australia, which is a central bank, you will find very little reference to reserves at all. The word has gone out of use. But nevertheless, effectively we have reserves. They're just not called reserves. And they are not, there's no statutory requirement attached to them. Each bank calculates what its reserves must be, whatever its reserve stock must be, and it also calculates its own reserve ratio effectively. So it's unregulated. It's a very unregulated system in that respect. It's regulated in other respects though. Liquidity management and risk management are very highly regulated. So banks are required to have enough cash in their tills and vaults to satisfy the demands of their customers, and also the liquidity requirements and risk requirements are also bolstered by having deposits in other commercial banks. Effectively, all these things are reserves, even if they're not called reserves. It's a fractional reserve system. There's no question about that. It is a fractional reserve system. It's very hard to calculate the fractions, but it is a fractional reserve system. There is actually a small, and it's even more complicated than that. I don't want to go into too much detail, but there is a small 1% depository requirement with the Reserve Bank by the commercial banks. Interestingly, the credit unions and building societies still retain a statutory reserve requirement of about 10%. Maybe they didn't have as much lobbying power as the big banks. I'm not sure of the reason for that. But there is that distinction. They're much smaller in size, of course. I think that's... I could say a lot more things about the Australian monetary system. You can get the information from the website of the Reserve Bank of Australia. Just type in Reserve Bank of Australia, and in Google or something like that, you'll get all the information on the details of the monetary system. I wanted to also say something about ERA. We produce a newsletter called the ERA newsletter. It's 32 pages, and you'll find the list of all our patrons and other vital information on the second page of each issue. It comes out every 2 months. It goes to all our members and libraries and other things. It's a very good newsletter. We have a reciprocal arrangement with other reform organisations in other countries. So we send them our newsletter, they send us theirs, and so on. If you're interested in getting it, just send me an email, and I'll arrange for something to be done. If you'd like to get a copy of it just to see what it's all about, I can send you a complimentary copy as well. So just let me know about that. I think I'll leave it at that now. If there are any questions, I'm very happy to